Hi, everyone. So I'm Robin Thatcher, also known as the Bitcoin Accountant, and I run a business By the Book Accountancy. I try and do Bitcoin and Boo crypto accountancy as well. So I'm one of the few people that does it. Dan, do you want to introduce yourself?
Hi, everyone. I'm Dan Howitt. I'm CEO and co-founder of Recap. We make crypto tax software. We help individuals, companies, accountants effectively get their head around crypto, help file self-assessment tax return forms, do annual returns, and enable, well, what we've seen a lot of recently is getting companies to put Bitcoin on the balance sheet.
Yeah, my name's Alan Edwards. I'm the founder of Evoke, and we're building tools to help with inheritance and continuity. So we are launching our B2C product soon, which is working with law firms, which is a Multisig wallet, and then also inheritance tools to fit within your will and such, and then working with some businesses on consultancy piece in regards to the mission of not losing any more Bitcoin is our mission there.
Thanks. So I am going to warn everyone, I am moderating this panel, but I am no Joe Nakamoto. So I am not going to be as interesting. Bear in mind, I am an accountant and tax advisor. That's about as interesting as I get. So on that, we'll start with, we have got the 3 C's: custody, control, and compliance, right? And I'm going to be open with you here. Custody is not my strong point. I get to speak to people every day, especially Bitcoiners. I hear different things, but through deniability, I don't want to know what people's custody solutions are. So I only know what I've researched. So Alan, I'm going to come to you on the custody side of things. What are you seeing in the market? What's Evoke doing? What do you think are the gaps in that market?
Yeah, so I mean, I think it's a big answer in terms of it depends what type of business you're running, the size of the business, and your ultimate goals. We work with some PLCs. For them, it makes sense to hold it in an institution that is insurance backed. On the businesses, SMEs, I think there's an argument to have an exchange with insurance backing. Self-custody, which is the gold standard, certainly as an individual, self-custody is the gold standard. That sometimes falls away with businesses. And then you've got to look at things such as, how much you're going to hold, what capital calls you've got, and what solutions fit that. We're very heavily on the multi-sig side. So there's different ways you can use this, and the technology around multi-sig is becoming incredible with Miniscript. So without going too much depth, you could have it, for example, where if you've got 3 directors, each director can have a key, and you need 2 directors to authorize a transaction. That's a perfect use case for multi-sig. But I think with any custody, I think it needs to suit not only the business, but the technical knowledge as well of those that are running it, and also for those that are going to inherit or take over. So, for example, if it is self-custody, that's relatively easy to set up. The risk with self-custody is the longer you have it, the more risk you're prone to. So that's why we always encourage our clients to audit your wallets every 6 months, move some dust around, make sure you know where your keys are, because the longer you have those solutions, that's where the risk is there. But the industry is moving that there are tools and companies to make your life easier and mitigate those risks.
So on that, I'd like to follow up on that, because obviously it's easy when we're experienced in the Bitcoin space to sort of talk about multi-sigs and all of these things. But I think a barrier to entry can be the complexity in setting up these sort of things. So I always find that custody is a bit of a moving sort of thing. You might start off at single sig, and then as you research more and read more, you want to progress. Like you say, every 6 months you review it and do an audit of it. So if someone's coming to you from day one, what's the number one piece of advice to start out that you'd give them?
I think that to start out is to find a custody provider that's essentially an on-ramp and off-ramp. Now, some of these will offer very good tools. I know Coin Corner are here. They work with businesses. They offer great tools for businesses. It's more working with them to understand what their goal is, why they're holding it. Are you holding it as a short-term hedge? Are you holding it as a long-term pot that you're eventually going to even borrow against? And then it's trying to find the right route to the solution for, ones that would offer leverage, for example. So it is quite a varied question, but I think the start is always find a friendly custodian. A lot of businesses will struggle with the banking routes. So, the EMI routes are probably the most viable. Most of your banks will probably be on the phone to you pretty quickly if you just deposit into Coinbase. But it's trying to find the bridge to that gap as well.
I know you're not necessarily in the custody side of things, but what are you seeing at Recap on that side of things?
So I would say everyone's kind of on a journey, and they're looking at self-custody, they're looking at a custodian, and people might not be ready to take the full kind of the steps into self-custody yet. So we're seeing like a lot of family investment companies that just want the Bitcoin exposure. And quite frankly, the easiest way for you to get that exposure is to buy one of the ETFs or one of the ETNs. So that's a really quick way to get exposure. And then as their kind of journey in crypto intensifies, you then start to get the questions around self-custody. On the other side of things, we've actually seen some farmers and estate owners wanting to acquire Bitcoin. And obviously they've been hit quite considerably by government policy at the moment. And there's no question that they're looking at self-custody. They want to own the asset outright. People can see potentially what's going to happen in the future, and they don't want their assets wrapped up in any kind of structure where you don't have ultimate ownership, essentially.
And I will add to everything that's been said, because I do see it all the way along. Please bear your accountant in mind when you consider these things, because the complexity of transactions can really cause a nightmare. So it's important to know when we talk about custody, know what you're doing from sort of day one. Because if you go and do one thing, then change 3 times, and then by the end of year 1, you've got hundreds of transactions that's all in a mess, that's really hard for us to reconcile at the end of the year, and it's going to cost you more money. So that's another thing to bear in mind while we're talking on that. Going on to the sort of control side of things, which does lead into custody a little bit, I think. But on the control side of things, I'm going to come to you first, Dan. What would you sort of recommend to start out with business owners, and what would be your advice?
If we kind of consider a business wants to make a Bitcoin investment, so it's something secondary to their business activity, core business activity, I would say the most important thing when it comes to controls is just keeping segregation. So treat your current business as one side of your business, and then your Bitcoin activity, completely segregate it from the point that if you want to invest and buy Bitcoin, you're going to onboard some fiat to an exchange, you're going to then buy the Bitcoin. It's going to keep your records very segregated. We see a lot of people have troubles with bank accounts when they start, unfortunately, accepting Bitcoin as payments. Certainly my bank said they would offboard me if Recap accepted Bitcoin as payments. But if you can keep that segregation, you can keep your bank. I also think as well, if we get onto banks, if you've got a good relationship with your bank, you can do almost anything with your Bitcoin. We've got a company that's got a 20-year relationship with their bank, and they've had no issues at all. But if you're a startup and you're not segregating your Bitcoin activity, it's certainly a reason for your bank to kind of offboard you.
There's definitely ways to get around that. That's why it's really important to have those conversations early on. Again, self-invested point of view, but speak to your accountant about it. Speak to people who are experts, who might know the tricks of the trade and the things to do to sort of avoid those problems. Those problems will come. I mean, for example, I bank, I won't name the bank, but I bank with a bank. I spoke to them at an event. They said, we don't deal in crypto. It's not on our risk register. We're not interested. I still bank with them. I just mask what I do. I use Coin Corner and I can mask what I do. So they have absolutely no idea. So I find that really important. It's a piece of advice that I give to a lot of people when they speak to me. On the control side, Alan, again, I know I'm giving really broad points, but I want you guys to speak upon your experience. So please, can you talk a little bit on the control side of things?
Yeah, I think from our aspect, it comes from how many key stakeholders are in a business. We are dealing with a bearer asset that if somebody has the keys, it's their coins. If you've got one person that has control over the company's assets, but they're a 30% shareholder, that in itself is a risk that either needs to be mitigated somehow, or those controls need to be shared and certainly documented. So we help with that documentation piece as well, and put the governance around not only who has the keys, when they can use those keys, what they need to do to use them, and essentially what boxes they're ticking to get there. I think that is key, and the earlier you do that, no matter how small or large your business is, It's going to make it easier when auditors are going to be more on this asset as well. We are seeing audit companies pop up that focus purely on this. Auditors are keeping their eyes on it as well. It'll make everyone's lives easier, certainly your own business's life easier, if you get those controls in place early and stick to them.
I will add to that because that's a great point. It leads on to the compliance side a little bit, but one of the things I see is when we talk about old school Bitcoiners, so to speak, when you go back to, some of you may know, there used to be an exchange around called Local Bitcoins, things like that. Those exchanges now don't exist. So what I've seen is people bought Bitcoin in the past, held it, didn't need their records, didn't use them for anything. They've just held onto it. Then when they come to sell it, they can't get the records they need. And from an anti-money laundering and compliance perspective, if they can't prove where the funds came from, they can't off-ramp it. They're trapped, if you like. And I know that's a flaw of the fiat system, but it exists. You almost off-ramp it out of the system. You need to be able to prove it to get back in. And one thing I always say is, whilst I don't necessarily agree with that, in this country we have very strict anti-money laundering laws that mean that if you facilitate, so if I get someone that's money laundering and I don't do enough to prevent them or realise what they're doing, I can be found to be facilitating, and that means I go to prison. So a lot of these companies have really strict rules that they need to follow for compliance. So that means if you can't prove where those funds came from, they're not going to take you. They're not going to take that money. The banks won't take that money. They won't even deal with it.
The world is changing fast, and your business is no exception. How you save, plan, and protect your future is shifting, and standing still now means falling behind. This is the reason we are launching the UK's first Bitcoin business network, and it exists to help UK businesses protect what they've built and turn Bitcoin into a genuine competitive advantage. It's a place for founders, entrepreneurs, and executives to share what's working, learn from people actually doing it, and help drive positive change across the UK. So if you are a business owner or an entrepreneur, hit the link down below to join the network and help shape the future of Bitcoin in the UK. Okay, let's get back to the video.
I know we've got a big subject that Dan wants to speak on, which is in the compliance realm, which is CARF reporting. So do you want to speak a bit about CARF and introduce it?
I'll try my best. So basically, in the UK, there's kind of two main pillars of compliance. You've got the regulatory side, which the FCA kind of looks after, if you like, and imposes on all of the crypto companies. And then the other side that doesn't really get much airtime is accounting and tax. And the reason for that is because all the big crypto companies are lobbying because they want a regulatory environment here in the UK. So that might be a reason why there's not much emphasis on accounting and tax. But the one thing that's kind of sneaks under the radar that there hasn't been really much scrutiny on is this new framework called CARF, which is coming out in 2026. So CARF basically will compel all of the cryptocurrency exchanges based in 66 jurisdictions to collect your tax identification number, and they will monitor your trading activity year on year and remit that directly to HMRC. So we're now moving into this arena where HMRC and tax authorities around the world have recognized there's this huge tax gap, and it's a perceived tax gap. They don't really have many analytics on the tax gap.
They have an estimate of how much compliance they think goes on and how much non-compliance goes on. 55
to 95% non-compliance.
So I spoke to HMRC recently, and we said that we estimate 80%, and they said we'd probably say a bit higher. So that's 4 out of 5 people they think don't comply with tax in Bitcoin and crypto.
No, that's fine. So basically this new framework called CARF is coming. It's coming thick and fast. There hasn't been much scrutiny on it. If you trade on a cryptocurrency exchange, your privacy is now at risk. And there's not really much we can do about it. And from a company perspective, it kind of means we need to make sure that when we are doing our bookkeeping, we are doing our end of year return, there is now going to be a benchmark for what you file on your end of year return. Quite frankly, at the minute, if you file something and you get an inquiry from HMRC, they've got nothing to benchmark you against because they've got no analytics. But moving into 2027, when the CARF data starts flowing, they'll know if you filed, they'll know that, what you're filing, does it fit within their expectations? So we're now kind of getting into this era where we need to be on top of compliance if we want to use our Bitcoin and crypto within the fiat system.
Yeah, and I'll just add to that. I mean, like I say, I have worked, as you have, with HMRC on points like this, and I think part of what they're trying to do is not just understanding more, but get more data. Because the more data they have, the more the information they have to make decisions on what they need to start looking at and where they need to focus their time. From a business perspective, this subject for me is very emotive, because I think the more, when you become a Bitcoin business, the more you can set up your controls and custody in advance of buying Bitcoin, the easier your life will become. You can prove everything you've done. You've already got the records in place. You've hopefully already got the right, I'd call it team, but accounting and tax and software and everything else in place. That's really important. If the thing I'm seeing at the moment in the accounting industry, and I was really surprised, me and Dan were talking about this the other day on the phone. I'm really surprised at the lack of knowledge in the accounting industry, and not just lack of knowledge, but bad advice. If you have a traditional accountant, they might say, yeah, I know what Bitcoin is. I wouldn't touch it, but yeah, that's fine. They have to know how to account for it. If they don't and they get it wrong, there could be consequences for you as a director if you're signing off those accounts. And I see that a lot. I've seen bad advice happen a lot. It's actually really simple. And I always thought most accountants would deal with it okay, but following our conversation the other day, it seems that's not the case. And I see a lot of Bitcoin businesses who are 2-3 years down the line having to refile accounts, having to correct errors that have been made. And let me tell you, this is not something I like about my industry, but you sign those accounts off as the director. You don't sign them off. Your accountant doesn't sign them off and doesn't become liable. Yes, if your accountant does something fraudulent, that's different. But if they make a mistake that you don't pick up, that you sign them off. That's something I'm quite, I see as quite important. So just make sure that you are getting the right advice. The other thing I'll add to that is don't be afraid to challenge someone. Ask them about their technical knowledge. Ask them what they're going to do with your Bitcoin. How are they going to treat it on your balance sheet? Don't just let your accountant run your business for you. Ask them what they're going to do and how they're going to treat it. I've had lots of conversations. When you talk about accounting standards within Bitcoin, you can treat the Bitcoin on your balance sheet at cost. So you don't have to revalue it every year. But some people will tell you have to revalue it every year. So I actually spoke to a business owner the other day who said to me, I was going to buy Bitcoin in my business, but I didn't because I don't want to revalue it every year and then have to pay tax on the profit. And I went, do you? And they went, well, do I? And I went, no. And they went, oh. So, and that's a factual conversation I had about 4 days ago. So this sort of stuff does happen. So do ask about their technical knowledge. On compliance, sorry, Alan, I'm going to bring you there. That was my little rant. What would be your number one sort of priority from an Evoke point of view on compliance?
Yeah, so ours would be just the documentation around your setup and your structure. So where you are holding custody is probably, certainly if it's self-custody, you're going to have a couple of solutions there. So it's documenting how you're holding that, the recovery for that as well. And then ultimately the beneficiaries of that. So if it's a business, who is going to be next in line to handle that. And this is a very infant industry. The compliance rules aren't there; they will come. And that's why I say, if you set up a healthy custody stack, document it well, and plan for the worst, then you can't go wrong. And that's the education gap. That once you go up that, it's then maintaining it. But it's worth putting in some time, I think, to get that education piece.
Okay, we're on our last 2 minutes, so I'm going to give you both a forum to sort of, on the subject of custody controls and compliance, give me a sort of 45-second pitch on how you see that going over the next 5 years and how that, how you can help people out here.
How I see custody go, I think we're soon going to see a lot of the banks that have pushed it away are going to quickly make a U-turn. We're seeing the likes of Fidelity who have been immensely successful with their institutional custody. There's, that's a costly route. There's going to be other solutions that I think come out. I think there's going to be more realistic and lower entry self-custody solutions for businesses that mitigate those controls across multiple stakeholders. So I think it's an exciting time. 2025 was really, we've had our meme coins, we've had our altcoins, we kind of had our treasury run, and that's kind of kicked the reality of holding these assets in a business.
Thanks, Alan. Dan?
So I'll focus probably a bit more on the accounting and tax side. If you hold it as a company, I think there's going to be way more scrutiny moving forward as to, are your accounts aligned, what exchanges you're using, and quite frankly, HMRC are going to get more information about us moving forward. So my advice would be to keep a single source of truth, a ledger about all of your Bitcoin activity, your purchases, your transfers to cold storage. Keep that in one place so you have everything there ready in case you do face an inquiry in the future. Equally, I would also say, though, if you want to stay out of the compliance headaches, the easiest thing to do is to buy and hold. As a company, the only thing you would need to do is basically give Robin your balance sheet every year.
Yeah, so I'll just add to that. One of the things that was talked about earlier about why you'd buy in a business versus personal, I like buying in a business. I think it gives you control. I think it gives you more control in the current landscape, the current government that we're in, the uncertainties that are coming within tax and everything else. I like the control that a company gives me. It gives me a lot more. I think everyone's different. So what one person might want to do might be different for the next person, but that's why I think it's important to have an accountant that understands. If you've had a long-standing relationship with an accountant, it doesn't mean that you can't speak to someone else about the Bitcoin side of things. That's not unheard of. It's people I work with all the time like that. They call me their Bitcoin accountant. I'm fine with that. I live with that. If you do want to have those conversations, I'll say it to anyone in this room, and I say it wherever I go. Most accountants should give you a free chat. I'll give you a free chat if you want to just chat it through and make sure and mark your old accountant's work. I don't mind doing it. Right, that's it from me. Thanks to Dan and Alan, and thanks to Jez and Jordan for today.